Looking at the Ukrainian conflict, what that's showing us is the difficulty in attribution, number one, and therefore the difficulty potentially of getting a claim paid out.
I want to come back to the word that Jay brought up. And so if anybody gets annoyed, it's not my fault. Jay did it. Jay, you talked about insurance. It is a topic that continues to come up, and especially with some of the drastic changes that we've seen on the outcome of WannaCry and some of the big decisions that came on the back of WannaCry, but now very specifically since the beginning of the conflict in Ukraine. So can you, and we will have a much longer conversation about this, but can you give us your sense right now of what you're seeing in the industry and where the pain points are going to be?
Yeah, absolutely. Huge topic. I'll try and be brief. Fundamentally, it's getting a lot harder to get insurance. And there's a lot of reasons for that. One of the main ones during the Ukrainian conflict has been Lloyd's providing underwriting guidance to insurers around war risk and exclusions around that, and that now trickling into policies that are being written for insured. So those who are out there buying insurance and looking at the Ukrainian conflict, what that's showing us is the difficulty in attribution, number one, and therefore the difficulty potentially of getting a claim paid out if there were to be an attack on you that happened to be linked to a group that may or may not be, or more likely may have been linked to the Russian state, as an example, right? So that issue sat for a while. It's something that a lot of people within the cyber industry have been throwing around, trying to understand more and more. But whilst we're theoretically thinking about how to attribute, and I think we still don't have an answer on exactly how easy it is to do, but I'll make that point again. I think a lot of people are jumping now much easier and much more, or with fewer barriers to the idea that, this is a Russian campaign, for instance. But I'm sure we'll talk about that at another point. But what we haven't necessarily seen with all of this is the idea that locally companies are growing their understanding and maturity enough of the insurance market so that they can make good decisions. There are organizations they tend to be larger, that have got, a dedicated insurance manager, someone who's watching those markets very closely, who are still struggling to understand how they can have an effective insurance program that genuinely protects them against the attacks. And a lot of that's down to, as I say, those exclusions and concerns around certain companies being a large target or not, and therefore either not getting insurance or being too expensive. But then also for others, it's just about getting the right fit for them. And my advice to any leader who talks to us about this, and I get the question, what should we do about insurance, or is this a good insurance product? First of all, we're not here to sell insurance. I can't possibly ever say whether it's
step in your career, Jay.
Maybe that's where I go. They all look very happy around Leadenhall. But the main thing I say is, I think businesses need to have a much more, and it's this horrible consulting word, holistic approach to looking at their insurance, ticking the bingo there. But the idea being that if we're looking for one product that's going to solve this problem because in our minds it's a single issue problem, I think we're getting it wrong. Cyber insurance today, I think, stands a lot more, especially for medium to large organizations, as a type of product that supports getting the right sort of expertise alongside you to respond. But the other costs associated with, restoring, recovering, all those kinds of things may need to come from elsewhere. So my advice is always, speak to your brokers, speak to your risk managers. Don't do this in a silo just within cyber, because it is actually something that needs an enterprise-wide response and an enterprise-wide understanding of what that insurance market looks like. But that's going to get more contentious. It's not going to get less. We know that the market's hardened. We know that businesses need to have a much wider view of what they do and don't want. And it's also led to businesses looking at self-insuring. So actually holding cash within the business, keeping it liquid for a rainy day, in essence, to self-insure against these issues, meaning they don't have to pay the premiums, but they feel like they've got some level of coverage. But that really depends on your organization, where you think the risk is going to come from, and therefore where it's going to fall out. So it's tumultuous times, I'd say, for buyers of insurance. But I think also to some extent, and I hope this is the case, but this is more of a prediction than anything else, there will be a normalization at some point. There's been a huge correction in the market because of all the ransomware attacks that have happened, the payouts around extortive payments, etc. And so the market's hardened, but we will hopefully over the long term start to see a softening in various places, not everywhere, that will get us to a baseline that people start to know and understand much better than there is. It's just a bit of pain right now.